Hello, everyone. Welcome to Pbolic Note. My name is Michael Kripchen, and today's Friday, March 11, 2022. And welcome back. In today's episode, I'll be looking at one of the other layer one protocols, which is going to be Cardano. I saw a great YouTube video today done by Invest Answers, which kind of showed what was going on with the on-chain analysis for with Cardano. And I'd like to basically link that with the actual technical analysis chart and show how what James on Invest Answers was mentioning about the on-chain analysis, showing how the whales had sold and a lot of the retail had bought the tokens of Cardano, how basically it's actually correlated, if you look at the charts, with what's going on with the technical analysis and also with this price correction that we've seen in the last 6 months. So anything we do here, it's purely for fun. This is not, I'm not a financial advisor. I'm not doing, I'm not sharing any of this information to encourage anyone to buy or sell Cardano. Please do your own analysis. And personally, I don't own any of the tokens of Cardano. So that's why I'm just looking at it and just to understand what's going on with this layer one protocol. So let's get started by doing a screen share so I can show exactly what I'm looking at. As I look at the actual on-chain analysis, we can see that, and we'll be over here. Yeah. So with the on-chain analysis, I'm using intotheblock.com. It's a great tool. There's other sites as well that do on-chain analysis like Glassnode and so forth. And I use this one. It's a great one. And let's look at what's going on high level with the actual statistics with Cardano. So as you look at it at its price as of today at approximately 0.80 US dollars, it looks like of all the addresses that have this token, there is approximately 6% of them that are in the money, and 90% of those token holders are actually out of the money. So that is not a great sign. That means that a lot of people are losing money with this token. And at the money is approximately 4% of the holders. And as we look at what's happened to those who bought the token, let's say in this range from 67 cents to 90 cents, from those addresses, there's approximately 2% that are in the money, and there's 97% that are actually out of the money. So that is not a, these are not great numbers. And also to look at historically what's going on, it looks like in early last year, in January last year, it looks like a lot of people were in the money as Cardano's price was higher. Obviously, I'm assuming. So if you go to what the price of Cardano was in January of last year, so let's use a different exchange so it can show us more of a historical for Cardano. So I'm going to be using this one here on Kraken. So as I go to the price of what the token was at in January of last year, it looks like it was trading at around 18, 19, or even 30 cents, right? And then it went up to as high as the highest was around $2. And then today is trading around 78, 79 cents. So that's why if you look at what was going on with the Cardano token in January, those who had bought in January, they were all basically making money as the time advanced. And then, I'm sorry, January was over here, 2021. They were making money. And then all of a sudden, as the price started getting corrected and then went back. So in August, when Cardano was at its highs, right around here, August, September, everybody was in the money as well, and then since then they've been out of the money. And what James had mentioned in his channel today was the ownership that he looked at. The ownership concentration was showing that approximately three or whales were only 3 of them. So the way this site or this tool uses whales, they call whales as owners that are basically that own 1% or more of the circulating supply, and then they say that an address that owns 0.1% to 1% are investors, and those who own less than 0.1% of the supply, they would call them retail owners. So if you look at what's going on basically with Cardano, we see that if you go to January of last year of 2021, it looks like the way the whales were basically holding approximately something in the range of maybe, I mean, we're just guesstimating here, but it looks like of the whole numbers, around 1.3 billion of the ADA tokens were held by the whales. Meanwhile, 25 times, or let's say 25 billion of them were held by the actual retail investors. So if you do a quick math there, I mean, let's round off numbers. I mean, if we round off the 1.25 billion to, let's say, 1.25, and then if we go to 25 billion, so basically at 25 divided by 1.25, we're looking at the whales basically, I mean, it could be 20 times. So basically 20-fold of the investors were basically retail versus the whales. Meanwhile, if you go back to, let's say, something like a year prior in January 2020, we see clearly that the retail owners were around, there was 18 billion tokens that were held by retail, and it was 10 billion that was really held by the whales. So basically 1/3 of the tokens were held by the whales and 2/3 were held by the retail investors. So that's why it's very interesting to see this, how this has really changed. And if we fast forward to what's going on today basically it looks like 2.62 billion tokens are going to be held by the whales, and meanwhile 59 billion tokens. So that's I mean, really it's tenfold. Okay, so it's basically more than tenfold, more than 10 times retail owners holding on to tokens than the whales. And if we look at what's happened as far as the price is concerned, I love looking at, when I look at TradingView, I look at it two ways. One way would be to look at what's going on with the token versus Ethereum. And then the second way would be to look at what's going on with the token itself on the let's say on the weekly chart. So if I look at what ADA or what Cardano has done on the weekly chart, we see clearly that since the whales have been selling, that the price has really been on a downtrend, tremendous downtrend in both ways, as far as both for versus Ethereum and also the actual price itself as well. So meaning that this is not a token that I'd want to buy until I see something changing here. And if you look at really what's going on with the moving averages, because the moving average kind of give us a great indication of where things are at as far as versus its historical. And if we look at, I'm going to go back to this Kraken chart that we've just done with the moving averages. We're going to see that right now we are on the weekly chart. We are already way below the 50-week moving average for the weekly. We're way below the 100, and we're heading potentially towards the 200-week moving average. So these are not great signs. It's definitely a very bearish signal. And if I was looking at doing anything with Cardano, I'd want to make sure that that it's first of all that I see more whale movement as far as bigger investors, smart money getting involved in the project, and also I definitely pay close attention to what's going on with the charts so that this negative trend starts reversing for both that on the actual weekly chart, and also of course versus Ethereum as well. If I look at what's going on with this token against Ethereum, we see the same thing as well. That's kind of been a very negative, especially since August of last year. So thanks so much for watching, everyone, and I look forward to getting your comments. Thank you. Bye-bye.